Headline consumer inflation edged up to 3.4% year-on-year in September. That's from 3.3% in August. The latest print shows inflation moved further away from the Reserve Bank's preferred 3% target, and so the likelihood of an interest rate cut has reduced. The Monetary Policy Committee will meet next month to decide on interest rates. In the meantime, Fitch expects South Africa to announce a revised 3% inflation target during November's medium-term budget policy statement. Earlier this month, Reserve Bank Governor Lesetja Kganyago stated that the SARB and National Treasury had agreed that the inflation target should be lowered, but discussions were still ongoing as to when the change should be made. The SARB currently has a target range of between 3 and 6%, with the objective of anchoring inflation at the 3% mark. Famous Brands has served up a treat for investors. The quick service restaurant group has delivered an 8% rise in half-year headline earnings per share. CEO Darren Hill says the sound financial performance is due to the enduring consumer appeal of the firm's brands and the prudent management of price increases. An interim dividend of R1.62 has been declared. That's up 8% on the previous period's payout. Famous Brands says it remains cautiously optimistic about the rest of its financial year as it hopes to benefit from lower inflation, stabilizing energy supply, and a strong restaurant pipeline. Vunani has posted a near 42% jump in half-year headline earnings per share. That's as an improvement in financial markets during the period lifted the performance of some of the financial services group's subsidiaries. Looking ahead, the group says that despite the year starting with a lot of global and local challenges, it believes that the firm is in a position to benefit from the improved growth prospects of the local economy, which should lead to improved profitability. The company has also highlighted that it will continue to look for acquisitions that are in line with creating a diversified financial services business. Quilter has reported a third successive quarter of net inflows above £2 billion. That's as the wealth management company's affluent and high net worth segments continue to attract strong flows. For the third quarter, net inflows amounted to £2.2 billion, which is a 48% jump on the same period a year ago, while assets under management and administration rose 7% to £134.8 billion at the end of September when compared with the end of June. Transnet plans to invest R127 billion over the next 5 years to modernize rail lines and upgrade ports. That's according to the state-owned freight and logistics company's CEO, Michelle Phillips. Speaking at the South Africa Tomorrow Investor Conference, she added that the firm will go to market for partners and funders to achieve the goal. That's as the firm looks to address the challenges that have hampered exports in recent years. In international news, Netflix's third quarter earnings fell short of Wall Street expectations due to a surprise tax expense in Brazil, but the company's year-end forecast beat analyst estimates. Let's take a look at this package report for more.
Netflix missed Wall Street's third quarter earnings targets due to an unexpected expense from a Brazilian tax dispute. Failing to impress investors used to fast-paced growth, shares tumbled in after-hours trading on Tuesday. Netflix posted net income of $2.5 billion for July through September, but analysts had expected $3 billion according to LSEG. Netflix reported an operating margin of 28% for the third quarter. Without the Brazilian tax expense of roughly $619 million, the margin would have exceeded the company's guidance of 31.5%. Despite the blip due to an unforeseen expense, analysts said it was a robust quarter for Netflix. Netflix expects $11.96 billion in fourth quarter revenue, slightly above Wall Street's forecast as it rolls out the final season of Stranger Things and streams 2 live NFL games at Christmas. With 300 million users worldwide, Netflix is branching into ads and video games, though analysts say those moves haven't boosted revenue much yet. Netflix was reported by CNBC to be among the interested parties in a potential sale of Warner Bros. Discovery assets. Co-CEO Ted Sarandos told analysts the company can and will be choosy about acquisition targets.
Meanwhile, UK inflation remained steady in September, boosting hopes for a potential Bank of England interest rate cut and providing a boost for Finance Minister Rachel Reeves ahead of her November budget. Here's more detail.
British inflation unexpectedly held steady in September for the third month running. It raised the potential for the Bank of England to cut interest rates this year. That was a boost for Finance Minister Rachel Reeves ahead of her budget in November. Official data showed Wednesday annual consumer price inflation stayed at 3.8%, its joint highest since the start of the year. Price growth in Britain is also still the fastest among the world's rich advanced economies. However, the Bank of England and many economists had expected a further rise to 4%. Inflation in the services sector is closely watched by the central bank to assess price pressures in the economy. It stayed at 4.7%, below the Reuters poll forecast of a slight rise. One leading economist said the year-long climb in British inflation appeared to be over. Britain's high inflation has added to the government's large debt costs at a time when demands on public spending are rising. Reeves is likely to raise taxes in her budget in late November to show investors she is on course to meet her fiscal targets. Reeves said she wasn't satisfied shortly after Wednesday's data was published. She suggested she was preparing measures in her budget to help bring down the cost of living. The central bank had previously said it expects British consumer price inflation to gradually weaken from now on, but the bank's policymakers believe it will only hit its 2% target in 2027.